and welcome back to Altcoin Buzz. It's me, Jimbo, back for another market update, and my goodness, we've got a lot to cover today. I'll try and keep it short and sweet. We will start with the Bitcoin technical analysis as we normally do, and we will also do some technical analysis on the Dow Jones index and see if there's anything interesting happening there today. We have Forbes commenting on the crash and unlimited quantitative easing and what effects that might have for gold and Bitcoin. And also, to finalise the video today, we've got one Bitcoin chart which may be showing a local bottom, and it could be really bullish. I think you're going to want to stick around to check that out. If you'd like a chance to win a CryptoTag Zeus starter kit, make sure to be subscribed to the channel if you're not already, and leave a comment down below, and we'll announce the winner on Saturday. If you'd like to continue to support the channel, please slap a like on the video. That really helps us get the content to more people. So as we normally do, we're going to start right here on the Bitcoin weekly chart. And there's a few things that I want to bring to your attention. Just to start with, I'm going to point out that we did close above that 200 weekly moving average, which we were highlighting previously as a very key area of interest. It's really nice to see. That doesn't mean I've turned full bull just yet, and I'm going to show you why. So the most significant thing here for me on the weekly chart at the moment is this resistance line ahead, this purple resistance line, previous support in our uptrend. This is the really key area for me. Once we break above that and get a close above that on the weekly, then I'm going to turn full bull on this weekly chart, but we're not there just yet. Just to give you an inverse of what could happen on this weekly chart as well, if we see the price break below this 5,500 level, and then subsequently break this 5,000 level where we see our long-term purple trend line that's set back from 2017, then as I highlighted in Saturday's video, I still believe we could see a wick down into this trading zone again. But again, for that to happen, we have to see a rejection at either this 6.5, 7.3 or along this long-term previous support line. So they're the areas where I'm watching on the Bitcoin weekly chart. Leave me a comment down below. Is there something else you're seeing on this weekly chart that I'm not? Let me know. Let's have a look at the daily and see if we can determine from there how this current developing weekly candle is going to play out. So we're here now on the one-day chart, and if you are familiar with this current indicator that I've got overlaid, I'm sorry, I'm going to teach you to suck eggs for a moment, but if you're not, here it is on the templates. It's the moving average exponential ribbon. You can overlay this on your own charts, very easy. I find this is a very good indicator for trends, okay, especially on the daily chart. As you can see from our previous price action, once we use the ribbon as support, as we did back here, you can see it was becoming support, we were using it as support, and we were in a clear uptrend whilst we're seeing it work as support, right? Once we break below the moving average exponential ribbon, we're in a downtrend, okay? You know, it's not always as clear as day as that, but it is a really good indicator to whether we're in a bull or bear mode as at the time. And as you can see, today's candle, and the reason that I wanted to bring this up to your attention today is because a lot of people are getting very emotional about today's candle, saying, oh, this is it. You know, as I said on Saturday's video, people are saying we're decoupling from the stock markets, this, that, and the other. Just don't get too emotionally involved, right? Just use the trading indicators that we've got to use for our disposal. And this is a really key one. Clearly, we've been rejected by this moving average, exponential moving average ribbon today, and we are below it, which means we are currently still in a downtrend. Even if we've seen this green candle, we are still in a downtrend. Until we start breaking up through this candle, this ribbon, and seeing closes above it, we're still in a downtrend, right? I'm just pointing this out. I'm not saying that this has to mean that we're going to break down further, but I'm just saying that don't, go entering some crazy longs. Well, I'm not a financial advisor, nor am I giving you financial advice. I'm just a dude on YouTube calling the charts as I see them. But I'm just pointing this out because I think it's a really big significance. People just say, right, bull mode engaged because we see a pump. That's not always the case. Sometimes it pays to be that little bit extra vigilant and use the technical analysis tools at our disposal to make a real gauge of where we're at. And clearly, we're not quite there just yet. So remaining on the daily just for one moment, I've taken off our exponential moving average ribbon and all of our indicators just to make this a bit clearer for you guys to see. Just look how well we have respected this resistance here at 6,500. We've got a couple of candle wicks that have pucked above it, but at the moment we just can't seem to break it. This is going to be a really clear indicator for us of how good momentum is. If we can get above this 6,450 to 6,550 area with a daily close, then we're going to start paying a bit more attention to the calls for a bullish momentum. But right now, we just haven't broken it. And what I want to do is I want to jump down onto the 4-hour chart right now, and I want to do a couple of little chart patterns here that it could play out either way. And I think it's important to analyze both particular playouts. Now, you can see that we've got this, potentially we're going to see this lower high form, and I wouldn't be surprised if we see some RSI divergences there as well, but we will overlay that in a moment. So the first line I want to draw, sets of lines that I want to draw, I'm going to draw here, one here, and another one here. Now, there's a part of me saying, could this be a rising wedge playing out on the 4-hour chart? Yet to be confirmed. We've obviously also still got this potential ascending triangle pattern, which we could be testing the top end of, but it just doesn't look like it's got the strength. But again, it's all coincides with this level at 6,500. This is a really, really key importance right now. We really want to see at least a 4-hour close above this, and that's going to start suggesting to us that there might be some more bullish price action on the way. And I'm just going to lay over a couple of other things that I think is interesting to have a look at. One that I really like to use is called the TDI, okay? So we're going to overlay this one from Electroneum, one that I like to use. Now, basically, fundamentally, this is a combination of moving averages, right? And what I really like about this is its ability to call moves before they happen. So right here, for example, back on the 7th of March, that time we were focusing on before previously, you've got this TDI up in this high area. We saw the indicator go red. We crossed the moving 50. This yellow line is called the moving 50. We've crossed down below it, and as you can see, we had the great big breakdown from it again. And again, what we're looking for, the ideal trade parameters of the Traders Dynamic Index. I'll try and explain it to you very briefly. So the best call on the TDI is for a long position, all right, for a long position, is for, and I'm going to make this full screen. Okay, so we've got, this is our static 50 line here. So you can see we're at the 50 level here. This is called the static 50. We also have this yellow line, which is called our moving 50. And you can see that this is right in the middle of our Bollinger Band range, which is also part of this indicator. And we also have these moving averages that work together. Now, the most ideal position for a long is a green cross above the moving 50, whilst the moving 50 is above the static 50. Now, I know that was a lot, so I'm just going to say it once more. You want the moving 50, which is the yellow line, to be above the static 50, which is this point here, our middle point. And we're looking for a green cross above the moving 50. And we are seeing that right now on the 4-hour playout. That would be the one thing that I would say to me is really saying, actually, there could be a real case for the bulls here, especially when you see that we could be in this ascending triangle pattern. If this plays out and we do break this line, then we could go on to test that that really important level. I can't see it on this chart right now, but at that 7,300 resistance, which I highlighted on the weekly, that could coincide with a test of that. But, you know, one indicator on its own is not great. Let's see if we can find any more bullish indicators on any of the other things. So let's maybe overlay, for example, the MACD. And when we put our MACD on, what we find ourselves seeing is, again, we're right at this point where we're about to test for another positive cross above the 0 line. This is another really good entry point signal. If we get this cross above the 0, it's going to be a positive and bullish sign. Nothing is confirmed as of just yet because we've still got 10 minutes or so of this candle left to play. Both of these indicators are lagging, so they could still see rejection. And when you look at the candle formations themselves make me less bullish than some of the indicators do right now. But there's some areas of interest to watch here right now on the 4-hour chart. Could we be in a rising wedge? Could we be in an ascending triangle? I'd love to hear your opinions. Leave it down in the comment box below. Next up, we're going to dive into what could be a critical bottom on one of the Bitcoin charts. So I mentioned that we'd seen a potential bottom in one of the charts, and I want to show you this right here. It's on the hash rate chart. We have seen a significant drop off over the last couple of weeks during all this financial uncertainty. We did see a lot of the miners seem to turn off for a short period of time, but they look like they might be coming back on. This would be really nice to see if this is a V-shaped reversal. As you can see, we've got continuous up and down movements all the way through this chart. Hopefully this just becomes another and we can break back up and continue to go. We want to start seeing it exceed these all-time highs again, because as you can see, it's been pretty consistently rising. And I think if we go and see the hash rate break the all-time high again anytime soon, that's going to be a really bullish sign. Even if price action doesn't move particularly, if the miners continue to turn their mining rigs back on, that's going to be a really good indication of Bitcoin's strength for the future. Remember, if you're not aware, hash rate is a measure of the amount of computing power that's running the Bitcoin network. There you go. The estimated number of terahashes per second the Bitcoin network is performing. So that's really interesting to have a look at, and we'll continue to keep our eyes on this to see how it develops. To conclude today's video, I want to have a look at the Dow Jones index, but I just wanted to point out to you, there's a really interesting article here on Forbes about the crash, unlimited quantitative easing, gold and Bitcoin, and just quickly come down to, there was one particular paragraph that I wanted to highlight to you. So we've got a couple here. So we've got, now a major fear will be of a rebirth of high inflation. The global economies will be getting an injection of cash and it creates demand without a supply increase to match. That will lead to inflation. Many old-timers will be thinking of this. It could happen. Now, the reason that I wanted to point this out is in my last video, I was sort of saying to you guys that I didn't think it was very wise to say about this whole decoupling from the stock markets because of the huge difference in liquidity. But one thing we could suggest that Bitcoin will prove itself against is inflation. If we do see this high levels of inflation, then I've got a feeling that there's a high chance that Bitcoin will be increasing on that as well. And I think it's really interesting if we go down to here and just read this next paragraph here as well. Obviously, these are a bit taken out of context. You should really come and read the whole article. But read this. The China quarantine story is long over for Bitcoin. And now it is the quantitative easing story that will be driving the price, and fears that inflation is bound to rear its ugly head. Gold will move too, but slower. There is so much more gold than Bitcoin. Inflation fears are endemic among lots of old powerful investors who knew the 1970s, and it's natural for them to imagine inflation following every economic disaster. They will gravitate to gold and silver too. Inflation might come, but it won't be a chronic issue anytime soon. Supply will be more flexible than demand and keep it at bay in the short time. China is likely to get its production capacity back long before demand resumes in the West. So the point that I'm trying to highlight to you here is that, you know, you've even got companies like Forbes coming out and highlighting that we're at a risk of inflation. They do play it down a little bit here at the end, but I kind of feel like it's their social responsibility to play down things like this because they don't want to put fear into the market. But isn't it really interesting to see them talking about Bitcoin and how it can hedge against inflation like gold? Just as I was saying to you on Saturday, this Bitcoin as a scarce digital asset can be a hedge against inflation. And if we see hyperinflation or we see increased rates of inflation over the next few years, don't be surprised if Bitcoin's price action is to the upside, because that would be what it would really prove itself best for me personally. Now, I've left this till very last today, and that is for a very important reason. That's because it's just turned 8 p.m. in the UK, and that means that the bell has just closed. The DJI has just closed. And what I want to point out to you guys is we have broken into that support box that I was highlighting for the last couple of videos. As you can see, we had this one wick which seemed to respect it and close above, and now we are inside the zone. What does this mean over the next couple of days? Well, it's really hard to tell at the moment. With all the financial measures that are being put in place by the Fed, we just don't really know the reaction. So far, all of the measures that they've put into place have just continued to see this slip to the downside. We have got a huge area. This is the weekly. You can see we traded even just in this small area of the box. Let's overlay a second box. Let's just put this on. Even in this second box here that we can overlay there, you can see that we traded within this particular range from November 16 to July. So this was, July 2016 to November 2016. So we were in this area for a very long time. And I think that just gives you an indication of just how dramatic this drop has been over the last couple of months. This is unprecedented. This is what normal price action looks like. You know, this is normal weeks with the Dow Jones index. This is not normal weeks. I think it's really interesting to see we're in the box now. I wonder if when we open up tomorrow, we see a further slip into this box now we're here. You've got to say, based on how much support there is in this area, it would take us some serious downside action to break that. That's bottom end of that support is at 1800. But as I said to you on Saturday's video, my key areas of interest here were between 1850 and 1800, and we're now below that 1850 area. We are at 1850.79, so we are right there on the area of interest. Tomorrow's open is going to be really interesting. Are we going to sink further? It's starting to look like it's almost undoubtable that we're going to slip further. We just can't see any end to this for the Dow Jones and the rest of the stock markets just yet. I mean, look at that trend line. We haven't even begun to approach testing our way back up out of that. Once we do break this trend line, then you're going to be looking at some potentially really bullish price action, certainly at least in the short term. Like, for example, here you can see we were on this downtrend, and once we did break it, we did see a bit of a relief rally and we broke back up, but nothing of any significance yet. And I also just wanted to once again highlight, this was something that I brought up in a previous video. I'm going to put us back onto the weekly chart, and I'm going to show you once again, just to highlight the significance of the area that we're in for the Dow Jones. We overlay our exponential moving average ribbon, and I just want to re-highlight to you guys that we are not even close to seeing this retest the exponential moving average ribbon yet. The 20 has finally crossed the rest with this today's open, so we have now seen the exponential moving average ribbon cross all the way. But the point of me highlighting that was when we take it back to the 2008-2009 recession, we can see that on the way down we tested here we are. As you can see, on our way down in the previous recession, we had suckers rallies, relief rallies all the way down here, testing this exponential moving average ribbon. It looks so differently to that. And until we start seeing some relief, you just have to think that this continues to go red. We're even hearing rumours that the stock markets might close for some time. That is absolutely bizarre. It's certainly something I've never lived through. I'd love to hear again what your opinions are on this. Do you think we're going to see some relief? Do you think what the Fed is doing is likely to have any positive impact on the market? How about if I overlay this line as well just before we quickly go? I think this might be of some interest in you, so I'm just going to get rid of these quickly. I'm just going to lay this line on here. This is something I saw someone discussing before. I mean, look, we've even broken this now. We've even broken that, yeah. So that's now. So now we've got this really heavy area of resistance to break through. Even if we do come back up, this support line is now broken. It's only got 2 points of contact, but we are now below it. So even to get back up anywhere above the 19 level, we've got to break through this heavy area. Please let me know what you think of this down below. That's going to conclude today's video. I hope you've really enjoyed it. If you have done, please slap a like on the video. If you're not subscribed already, be subscribed. And if you want a chance to win that crypto tag Zeus starter kit, make sure to put a comment on the video. We'll announce the winner on Saturday. I will be back for another video on Wednesday where we will catch up. If you guys have got any recommendations or if you've got any ideas of what you might like to see me cover in these videos, please leave them below and I will take them into consideration. Until then, guys, bye.